Hello students, Assalamu alaikum. Today we are going to solve O-level accounts paper of MCQs. So here is your paper. Okay. May, June 2022, 7707, paper 12. Now, I forgot, sorry. Next. Now, which task must be carried out by a bookkeeper? Comparison of financial statement between 2 years? No. Preparation of financial statement? No. Provision for information for decision making? No. Yes. Then D option is left, that is recording financial transactions. Okay. Now, the following ledger account appeared in the books of Lee, a trader. Okay. Now, Amraz is a supplier of Lee. Okay. Now, which statement correct? Amraz allowed $100 trade discount. Trade discount never appears in accounting records. So this could not be the answer. Amraz owed Lee. No. Amraz is not owing anything to Lee. Okay. Lee owed Amraz 2,950 on 30th April. Yes, this is true. So this is the answer. So now we don't need to go for option D. That must be a wrong answer. Okay. Now, Sarah sold goods on credit to Zafar. Okay, my name in the paper. Okay. How was this recorded in Sarah's ledger? When she is selling goods, she has to credit sales in general ledger. Okay. So sales credit is the only this option. So it means she has to debit Zafar. A option should be the answer. Got it? Okay. Now next. Umar sent a credit note to Mariam for goods return. How would Mariam record this? When Umar is sending, it means Umar is the seller, Mariam is the buyer. So this is for Mariam is C option. Umar debit, purchase returns credit. Very simple. Ben sold goods to David for 900 cash, in which prime entry would David record his transaction? Obviously cash book. Okay. Now, a petty cashier received $100 from the chief cashier and $10 from an employee who had made private calls on the telephone. How would these amounts be recorded in the petty cash book? We have to debit petty cash book by 110 and we will credit cash book by 100. The option should be the answer. Very simple. Which is an example of compensating error? A payment for office equipment repair was debited to office. This is error of principal. A purchase of C. Jones was credited to C. Johns. This is error of commission. Sale of goods, $65 to A. Aziz was entered as 56. Transposition error. Okay, what is left? Yes, D option. Okay. Now, next. After the preparation of Abdul's draft financial statement, the two errors were taken. Purchase of machine by a bank transfer 5,000 was omitted from the accounts. Okay. Purchase of motor vehicle 15,000 was entered in the motor vehicle repairs expense. Okay. What effect will correcting these errors on the non-current assets and the working capital? Now, working capital is going to be decreased by 5,000. Getting my point clear? Working capital is going to decrease. So answer could be A or C. But non-current assets is going to be increased by 20,000. 15 plus 5, 20. So it means C option should be the answer. Okay. Why is the sale ledger control account usually prepared by a different number of staff than the person who maintains the sale ledger to the frauds? The first reason of making sales ledger control account out of accounting cycle is to deter fraud. Okay. What would be recorded on the credit side of a sales ledger control account? Cash refunded to credit customers. No. Credit sales. No. Interest charge on sales returns. Yes. So D option should be the answer. Okay. Maria's draft income statement for the year ended 31st March 2020 showed a profit for the year 38,750. Okay. 38,750. Okay. On December 31st, 2020, Maria received a 5% bank loan of 4,000, which was incorrectly treated as revenue receipt. So that is going to be removed from the profit along with the interest. Because when you included it in your asset account, in your revenue account, it means you have not calculated the interest on loan. So what will happen? See, uh, sorry, 38,750 minus 4,800, 36,950. Okay. Now interest also. 4,800 loan was obtained on at the rate of 5%, multiplied by 5%. Uh, December 31st, okay, 2021. Three months. So 38,750 minus 60 minus 4,800. That would cost. Okay. हो जाएगा. Okay. Now, if you take out interest on loan, so that would be 4,800 multiplied by 5 divided by 100. So that means this loan interest is 4,800 multiplied by 5%, 240. Out of 240, now actual interest to be paid on the loan was for only 3 months. That is from January, February, and March 2022. So multiply by 3 divided by 12. That is 60. But they have included the whole year as expense. Whole year interest as expense. So 240 minus 60 is equal to 180. 180 is included in net income as expense. But the real expense for 3 months was $60. So we have to add back 180. Now see, 38,750 minus 4,800 the loan amount plus 180 the interest amount of 9 months, which was mistakenly added, 34,130. So B option is the answer. Okay, getting my point clear? Okay. Now see, next question. Which statement about reducing balance method of depreciation is not correct? A lower amount of depreciation is charged in the early years of asset's life. Yes, this is the answer. This is not correct. In depreciation, early years, the depreciation charge is high, not low. Okay, so 12A is the answer. Don't need to bother about other options. Okay. The financial year of Yang ends on 31st March. On 1st April 2020, he purchased a machine for her. He estimated it could have a useful working life of 3 years and a residual value of $100. Yang uses straight line method of depreciation. What happens? 4,000 cost minus 100 residual value divided by 3. The 1 year depreciation is 1,300. Okay. Now, out of 4,000, after 1 year use, he's selling 4,000 minus 1,300. Book value is 2,700 minus 1,500. He got for he realized for the he realized 1,500. So it means he sustained a loss of 1,200. Well, 12, 13, 14. I'm sorry, class. Actually, the changing weather in Karachi immensely affect me. I'm sorry. Okay. On 1st April 2021, commission receivable 210 was outstanding. Commission received during the year 31st March 2022 amounted to 4,850. 4,850 received during the year minus receivable at the start of the year 210. So we have to make an entry of 4640, and this is income. So income statement is going to credit. A option is the answer. Question number 15. Newless financial year end on 31st December, she maintains a provision of doubtful 5% of trade receivable. On 1st January 2021, the provision amounted to 800. On 31st December 2022, trade receivable 13,400, of which 600 was agreed irrecoverable. 13,400 minus 600 irrecoverable, it means the trade receivable on 31st December 2021 is 12,800 multiplied by 5%. So, provision for doubtful debts on 1st January 2022 is 640. Got it? Now, 16, I'm sorry. After the financial statement for the year ended, 30th April 22, a trader discovered the closing inventory had been overvalued. When your closing inventory had been overvalued, it means your profit is overstated, your capital is overstated because of the overstated profit, and your profit next year will be understated. So A option should be the answer. 17. Mariam owns a business providing accounting service. She provided the following information for the financial year 31st March 2024. Fees owed by clients on 1st April 20. Fees received during the year 20,000. Fees owed by clients on 31st March. Very easy. Fees received during the year 22,500 plus 22,500 plus 1,500. 2,500. I need to have a calculator. Now, 22,500 plus 1,500 receivable at the end of the year minus receivable at the start of the year 4,500, 19,500. A option should be the answer. 18. Which item would not appear in the appropriation account of partnership? C. Interest charge on partners' drawings. It's going to be added in the account. Okay. Interest paid on loans from the partner. This comes in income statement, not in appropriation account. Okay. Interest paid on partners' loan capital appropriation account. Salaries will appear in appropriation account. It means B option should be the answer. 19. Carol and Denise are in partnership sharing profit loss in the ratio 2:1. Denise's current account balance were as follows: 2,000 debit at the start of the year, 7,000 credit at the end of the year. No drawings. Total profit of the partnership. If she has closing balance 7,000, it means her current account is credited with 9,000 for the profit. If 9,000 is her ratio, it means 18,000 is the profit of Carol. Getting my point clear? So 18 plus 9, 27,000 is the total profit of the firm. 19. D option is the answer. Now come to 20. Which statement are correct? A debenture limit holder of a limited company is liable for the debts of the company? No. A partner is liable to pay debts for him personal assets. Yes. A shareholder of a limited liability company is responsible for the company debts? No. A sole trader is responsible for all the debts of his business? Yes. 2 and 4 are correct. It means C option is the answer. Okay, 21. The draft financial statement of a limited liability company showed a retained earning of 31,820. It was then found that no one is being paid for the following: Commission receivable accrued 450, insurance prepaid 175. So 31,820. I have to use this one. 31,820 plus 450 minus 175. The answer is 31,820 plus 450 plus 175, 32,445. The option is the answer. Okay. We have to add commission receivable and we have to add insurance prepaid, because prepaid insurance is decreases the expense and increases the profit. Which statement about club account is correct? Okay. See, capital revenue transaction are recorded in the revenue, income and expenditure account. No. Non-cash transactions recorded in the income and expenditure account. Yes, this can be true. Only revenue transactions are recorded in the same payment account. No. The closing balance and receipt will represent a surplus or deficit. No. So it means B option is the answer. Okay, 23. A sports club provided the following information for the year ended 31st December 2021. 1st January 2021, a subscription paid in advance, 200, subscription outstanding on 31st December 450, subscription received during the year 8,800. So the answer is, how to calculate the answer? C. Subscription received during the year 8,800. Okay. Plus 250, 200 prepaid at the start of the year, plus accrued at the end of the year. This is 9,450. So it means D option is the answer. Okay. 24. The work in progress of ZT Manufacturers Company on 1st January was valued at 6,200. At the end of the year, it was valued 5,400. What was the effect on cost of production for the year? What we do when we, after calculating cost of production, we add opening, work in process, opening, and we deduct work in process ending. So it means 6,200 minus 5,400. It means cost of production is increased by 800. C option should be the answer. Okay, 25. A manufacturing company provided the following information: cost of production, finished goods, opening inventory, finished goods closing, and purchase of finished goods. What we have to calculate? Cost of sales. So what we have to do? Okay. Opening inventory of finished goods 42,000 plus 345,000 cost of production plus purchases of finished goods minus closing inventory. 3,66,000 should be the answer. Now, Tahir provided the following information. क्या हो गया? Tahir provided the following information for his first year of trading: sales, return, purchase. What was the value of closing inventory? Okay. So what we have to do? We have to calculate closing inventory. See, this is the first year of trading, so there is no opening inventory. We have to keep in mind that. Okay. 170,000 minus 6,000 multiplied by 75 minus 6,000. 6,000. How? See, take sales 170,000 minus 6,000 sales return 1,64,000 multiplied by 75% is the cost. It means 123,000 is cost and 129,000 is purchases. So difference is 6,000 is closing inventory. Okay. Now 27. Business provides the following information: opening inventory, closing inventory, rate of inventory turnover, calculate the purchases. Okay. So what we have to do? First, we have to take average inventory. 6,000 plus 6,800 divided by 2, 6,400 multiplied by 5. 32,000 is cost of sales plus closing inventory 6,000 minus opening inventory 6,800. So 31,200 is the amount of purchases. B option should be the answer. Now come to question 28. A trader provided the following information at the end of the year: revenue, gross profit, expenses. What was the profit margin? So answer is what do you think? C. The difference between gross profit and expenses is 8,000 divided by revenue 80,000 means 10%. Yes. Easy. A trader provided the following information. Okay. Profit, working capital, capital, non-current liability, what was return on capital employed. So capital employed would be 1,50,000. How? So 24,000 divided by 1,50,000 multiplied by 100. 16% is the answer. The option. Okay. Capital employed means capital plus non-current liabilities. This is return 24,000. 24,000 divided by 150,000. 16% is the answer. Samuel, a trader, decided to issue a statement of account. Issue account means he is keeping records of all the customers. So which ratio is helpful? Trade receivable turnover, nothing else. John rates of inventory turnover 10 times in year 1, 8 times in year 2. What may have caused the change in the rate of inventory turnover? The first and the most important reason is fall in demand. Okay. Now 32. Maya had annual revenue of 100,000. In year 1, her gross margin was 45%, gross profit margin 5%. In year 2, her gross margin was 40% and her profit margin was 3%. So when gross margin is decreasing, it means cost of sales is increased. So answer could be 3 or C or D. Getting my point here. But the thing is, if we take the difference of gross margin and profit margin, we'll find here expenses are 40% in year 1. Here expenses is 36%. So expenses are decreased. C option should be the answer. Why would a bank manager be interested in the financial statements of a business? Okay. Bank manager is interested to calculate the and assess the trade payables turnover. No. To check the correct amount of tax being paid, is not interested in tax. So it is not a tax stakeholder. To ensure that employees are being paid correctly hourly rate, is not an internal stakeholder. Okay, only thing is left. Yes, to ensure that funds are sufficient to cover loan interest. Revenue should only be regarded as earned when the legal title of goods and services passes from the seller to the buyer. To which accounting method does this statement refer to? Realization. Yes. The information provided a financial statement should be capable of being independently verified. Verified means reliability. Okay. So that's all for today. Best of luck for your October-November exams. If you want me to solve any particular paper for you, just leave a comment. Inshallah, I will do it. Thank you. Take care. Allah Hafiz.